You're here today for your daily brief about real estate projects in Dubai. This time we're breaking down Binghatti Flare, a new twin tower development in Jumeirah Village Triangle. It's making a lot of noise in the investment community. High yield, good payment plans, and a location with fast growing demand. But are the numbers solid? Which units actually make sense? And is the hype justified? Let's take a closer look. So what is Binghatti Flare? It's a two-tower residential complex in JVT, 40 floors in one tower and 34 in the other, with a total of 1,378 apartments, ranging from studios all the way up to 4-bed sky terrace residences. We've got gyms, pools, and an artificial beach, paddle courts, a sky deck, all the usual Binghatti Flare. But this time with more layout, variety, and a curved, light-sculpted design that actually stands out. The launch prices are what caught our attention. Studios are around 775 to 800,000 dirhams, one bedrooms from 1.2 million, and two beds from 1.8 million. There are even some limited 3 and 4 bedroom units with rooftop pools and private terraces. Now this is off plan. Handover is scheduled for mid-2027, and the payment plan is light, just 10% to book and around 60-40 or 70-30 depending on your setup. Let's talk about location. Jumeirah Village Triangle. If you're not familiar, JVT sits strategically between Khail Road and Sheikh Mohammed bin Zayed Road. It's next to JVC, close to Dubai Marina, and about 15 minutes from Palm Jumeirah or Expo City. Rental demand here has been rising fast. That's especially true for newer, high-spec apartments. As of today, average rental yields in JVT are sitting around 6 to 7%, and for smaller, newer units, it can go even higher. Studios and one-beds are the top performers. And here's the important part. Binghatti is positioning Flare as a luxury asset inside a mid-income neighborhood. The gap can work in your favor. It means you're giving renters something they can't find nearby, full amenities, skyline views, great finishing, without crossing into marina or business bay prices. So let's break down potential ROI across the different unit types. Now, studios at 800,000 dirhams can rent long-term for around 50 to 65,000 dirham per year. That's already around a 7 to 7.5% gross yield. But if you're doing holiday homes, you could be making closer to 75 or 80,000 dirhams per year. That's closer to 9 to 10% gross yield. And yes, we've accounted for occupancy. Now, one bed's around 1.2 million can bring in 80 to 90,000 dirham in long-term rent. And again, short-term rates would push that up. Think 400 to 600 dirham per night, which gets you into the 8 to 9% gross yield range. Two beds starting at 1.8 million are more of a family option. Long-term rent could be around 120 to 130,000 dirham per year. Short-term, you might do 600 to 800 a night, depending on view and finish. That gives you 6.5 to 7.5% gross yield. 3-bed and 4-bedroom units are obviously more exclusive. Fewer in supply, higher in price, we're talking 2.5 to 4 million. Here, your yield will drop to 5 to 6%, maybe 7% if managed as a high-end short stay. But these are often lifestyle buys or for resale upside, not pure cash flow. Now, not all units will perform the same. Let's talk views. Some of the best units in Flare face the Dubai Marina skyline. Right now, that view is incredible. But, and this is important, JVT is still under development. There's a chance the buildings in front could go up over the next few years and partially block that view. So if you're investing in a premium-facing unit, go higher. The top floors are always safer. On the flip side, inward-facing or podium-facing units won't have the same mental appeal. You'll get less light, less privacy, and probably 5 to 10,000 dirham less in yearly rent. If the difference in price is small, go for the view. Unless you get a full artificial beach view from your apartment, and in that case, even an internal view will do very, very well and could do even better than the maritime skyline view. As a rule of thumb, corner units, skyline facing, and higher floors will give you stronger resale and better tenant demand. It's worth that premium if your goal is both yield and appreciation. Speaking of appreciation, what can we expect by 2027 or 2030? Here's the logic. Off-plan in Dubai typically appreciates 10 to 20% by handover. especially in the areas like JVT where there's ongoing infrastructure and lifestyle upgrades. So if you buy a studio today for 800,000 dirham, you might be able to sell it in 2027 for 900 to 960,000 dirham. A 15 to 20% gain. Stretch that to 5 years and we're estimating around 25 to 30% capital appreciation. That's assuming moderate growth, not market euphoria. So if you hold for 5 years and you're earning 7 to 9% rental income per year, plus 25% appreciation, you're looking at a total ROI somewhere around 50 to 60% on your invested capital. That's quite strong. But let's not sugarcoat anything. There are risks here, like in any other project. First, future construction. JVT is still evolving, so even if you have a great view now, nothing is guaranteed unless your site faces a park, a low-rise zone, or an artificial beach. Second, oversupply. JVC and JVT are both buzzing with new launches. If too many projects hand over at once, rents could get competitive, so don't rely on inflated short-term rates. Be realistic with your yield assumptions. Third, service charges. We don't have official numbers yet for Flare, but with all the amenities, it could be between 15 to 18 dirham per square foot per year. That eats into the net yield, and always calculate based on net, not just gross. And lastly, short-term rental regulation. Dubai's current policies are very investor-friendly, but you never know when new fees or rules could change the equation. That's why we've given both long-term and short-term ROI ranges. So what's the bottom line? Binghatti Flare is one of the strongest off-plan launches in JVT this year. The location is right, the prices are competitive for a premium product, and the rental demand is there, both long-term and short-term. If you're an investor looking for strong ROI in a growing community, studios and one-beds here are your power plays. You'll maximize rental yield, minimize service charges, and likely enjoy a healthy resale bump in a few years. If you're buying for lifestyle capital gains, the 2 and 3 bedroom units, especially with the views, are your long-term bets. Either way, this is one of those projects where a bit of due diligence goes a long way. Pick the right unit, manage it well, and Flare could easily outperform most mid-market investments in Dubai. Thanks for watching. If you want access to priority units or layout advice, message us directly. We're already helping clients lock in the best views.